looking at this month's session, we're actually revisiting a topic which we looked at a couple of months ago, which had a lot of kind of interest. Looking at the topic of credit scores. So a couple of months ago, if I remember rightly, we spent a fair bit of time kind of looking into how does the credit scoring system work. What are the different credit rating agencies? What are the information they've got on you? What affects it, and things like that. But I think so a lot to cover in an hour. So I think there were a few unanswered questions from that one. So this month I think we're going to go into a little bit more detail, do a little bit of a deeper dive into some of the practical things that we can all do in order to improve our own credit scores. So if you're interested in kind of credit scores and credit reporting more generally, would really recommend going back and watching that previous one when you get a moment. But today we're going to focus on specific things that each of us can do to improve our credit score. So without further ado, delighted to again be joined by my colleague Linz. Linz is our digital marketing officer, so works with me to help to promote our services and our products, and to raise awareness those through our digital outreach work, of which this is one of them. You'll know me from previous sessions. I'm Ben West. I do business development at London Mutual, helping to develop our products and services and make them kind of more accessible to a wider range of people. So really pleased you're able to join us today, and we'll hop straight in. So in terms of what we'll be covering today, we'll just be recapping a little bit from last month's session, talking about why good credit matters, because actually I think as we're going to talk about, covers more areas of our lives. I think it affects more areas of life than certainly I kind of initially thought off the top of my head. Next up, we'll talk about how what a lender's looking for, and perhaps a little bit about how that relates to the dating game. We'll be looking at some practical things, things that might be hurting your score that you're not aware of, so that you can go and get those fixed. We'll round things up with practical steps to building better credit before going into our usual Q&A. I think the other thing to say about this week's session is that we're doing things a little bit differently. We're going to have some polls and some opportunities for you to have your say, because I think we're keen for this to be a little bit more of a kind of discussion in this one. So it'd be interesting to get some of your views on some of the issues as we go along. So as we go along, if we've got a question for you, or a little bit of kind of want to take the audience temperature or digital view on things, you'll see a question pop up on your screen. You just need to answer true or false, and then we'll show the results back to everyone. Don't worry about getting the answer right or wrong. It's all anonymous, but it'll be really interesting as we go along to get a little bit of audience feedback. And to see what everyone thinks. So as with all new technology, it might not go completely smoothly. So forgive us if there is a glitch or two along the way. It might not be as smooth as it will be after we've tried it a few more times. But we're going to give that a go this week. So as I say, true or false, a high salary helps your credit score. So in a second, you should see a poll coming up on your screen. And we want your view on whether or not you think a high salary helps your credit score. So we'll give you a couple of minutes to get everyone's views in. Please do vote true or false, and then we'll spend a couple of minutes discussing everyone's answers. So I can see two people. We've got a few more people on. Generally, it's all going one way. 3 votes. Okay. Couple more minutes, and we'll keep the pace of this going. So I think about half the people have had their view now. Oh, we've got one person that disagrees. Couple more minutes. It's going to be neck and neck. It's going to be neck and neck.
Yes.
Couple more minutes, and if you're just joining us now, you'll see a poll question up on the screen. We want to get your views on whether or not a high salary helps your credit score or not. So we'll close that poll in just a second. Okay, we're going to end that now. So in terms of sharing the results, you can see that actually out of people watching today, pretty much split. I think most people say that your salary doesn't help your credit score, but a few people that think that it might do. So in terms of our answer, and our answer today is false. So it's false. So tell us why, Liz.
Okay, so yes, having a high salary could, potentially help with your credit score. But ideally, lenders are more concerned about your financial behavior, so that if you pay your bills on time, if you apply for too many loans, that's what they're more concerned with. However, if you
there is a but here, isn't there? There is a but.
Yes.
And the but is here.
However, if you do have a high salary, then you're more prone to have less issues with paying your bills on time, which in turn, will help your credit score. So it's a bit of a sticky one in the sense.
Okay.
Yeah.
But in general, you can be on a high salary and have poor credit.
Yeah.
And equally, you can be on a low salary and build up relatively good credit. So
Exactly.
based on behaviour, ultimately, I think is the key message there.
Yeah.
Thank you everyone for your views. There'll be more opportunities to get your feedback as we go along. So just want to kind of jump now into why good credit matters, Linz. So it affects a broader range of aspects of your life than you might initially think.
Yeah, that's true. I think we can all agree that in general, having good credit will definitely make your life a whole lot easier in many avenues. But these are just like a few of the ones which I feel are, important. So firstly, but just to touch on a few of them, I would say like with employment. So there's certain security conscious jobs that will run or carry out security credit checks on potential employees, and this is because they would want to make sure that they're not likely to engage in acts of bribery or corruption because they're not really in a good place financially.
Okay, so for example, if you're a police officer,
for example, police officer or the armed forces, they would definitely run credit checks on potential employees.
So having bad credit in some cases could affect your ability to get promoted or get a job.
Yes.
So that's quite a sort of an extreme example.
Yes.
But what other aspects of it?
So other examples would be like your phone contract and finance options. So this in itself is a form of credit because you take a phone and you have to pay it off monthly. So if they run, credit checks and your credit score isn't, up to par, then they may be hesitant to give you, grant you such perks.
Because you don't often think of it in that way in terms of like having a mobile phone contract. But I guess that they're handing over the phone. You're taking the phone home and you're paying it back over a period of time. So you might not think of a phone contract as a loan, but if your credit is really bad, you may struggle to get a mobile phone contract.
They need to trust that you'll be able to pay. You'll be able to pay it monthly on time and so forth. So it's also like
okay. So broader area, a range of areas of life than you might think.
Yeah, also mortgages and renting, borrowing money, those kind of things. Definitely, your credit score is will definitely play a significant role.
So if your credit score is less than perfect, don't panic. We're going to go through some of the things that matter. And I think one of the things that we were talking about when we were putting this together was that in terms of there's a whole set of kind of rules which we talked about last time in terms of what they look at and things like that. But one way to think about credit is a little bit like the dating game. You're a fan of this particular TV show.
Yes.
This is Take Me Out, yeah? So if you've ever seen Take Me Out, when you apply for a loan, think of it a little bit, the sort of the lights going on and off. Is that pretty much it?
Yes, I mean, there's like a certain criteria that that you have to meet,
Okay, so what are you looking for in a financial partner?
Firstly, someone who's dependable.
Okay.
I need to be able.
What do we mean by that? Yeah.
So with regards now to the lending, we need to your repayment history. We need to know that you've been paying your bills on time. You've been consistent with that, so you're trustworthy. I can depend on you. I can give you that loan. So,
okay, so it's dependable. That's one of the things that lenders are looking for. Are you dependable? Can you be trustworthy? Repayment history, settled and well established.
Yes. Yes. You don't want someone that's all over the place. You need to be consistent.
Yeah.
Well established. We need to be able to. If you say you're here, you're there.
Yeah.
I don't want to be you jumping all over the place.
So that's going to raise some red flags to the lender. Is that if they see that you've moved about quite a bit, you haven't updated your bank and your lenders each time you've moved, it's all a little bit complicated. that could potentially raise some flags there. So I think, keeping your address history nice and tidy,
Yeah.
an important one.
Okay.
What else are we looking for in a romantic relationship or a financial relationship?
Previous relationships. What happened there?
Okay.
Let's see, like, what has been your pattern that I need to know, like, what I need to look out for, what to potentially expect. So with regards to lenders, they need to know that what type of loans have you previously applied for? Have you paid up those loans? Were you trustworthy? So all these things are interlinked.
Do they have a type, right?
They do have a type of loan that you tend to always apply for.
In the past, have they kind of gone with lots of sort of low cost lenders in the past,
Yes.
or is it is it going to be expensive? They into overdrafts, or look, everyone's got different preferences, right?
Yeah.
But they're looking for what kind of previous financial relationships you've had.
Yeah.
I think other aspects. Want them to come from a good background, perhaps, whatever that means to you, but they're looking into your background as well. So it's a credit history there. I think this is an important one here in terms of their lenders when they're looking for they want to see that you've had an established track record with a range of previous, whether that's with your bank, whether it's with your credit card company. They're not looking for someone that's going to be hopping around often. And I think that ties into the next one, commitment issues.
Commitment issues. Yes. So you need to know. Well, lenders would need to know like what you owe elsewhere. Like they need to know that what you were owing elsewhere, that's been dealt with accordingly. That they know that they can be able to trust you as well. If they have to lend you money, that there'll be no commitment issues.
Okay, so what you owe elsewhere. So I think if you've already got a lot of borrowing with other across a range of different credit cards and things like that, they say, well, actually, there's not enough room in your life for another loan.
Yeah.
And so those commitment issues in terms of what you owe elsewhere, I think is important too.
Yeah.
This last couple this last one, not desperate. So lenders are looking out for signs of desperation as well. Is it fair to say?
Yes, and if you've applied for too many loans, then it starts to raise questions. Why are you applying for too many loans? Are you not being, are other lenders not giving you the loans? Because the fact that you keep on applying, it just raises questions about, your character, I would think.
Okay, yeah, that makes sense. So I think that's another mistake that people often make is applying and being rejected lots and lots of times over, and it's a cruel world out there, Linz. But that repeated rejection, often can raise some red flags with people. And then I think that the last one, hopefully, is the Billy Joel song "Honesty."
Yeah.
It's such a such a Honestly, signs of fraud or legal issues, again, those are going to be some red flags. So, we're being a little bit humorous here today, everybody, because it's a pretty cloudy day and pretty dark out there. But hopefully, by thinking about kind of credit histories and what lenders are looking for in those sorts of terms, helps you to get an understanding of some of the things which might be causing red flags when you apply for credit or are turned down for credit. And some of the things that you can do differently. So, a little bit of humor there, but serious points. So I think, going more into some of those specifics, Linz, generally 3 areas that they're interested in. Yeah.
So there's 3 key areas that scare off lenders. So these are the things that they would look for. So firstly is a messy credit report. Secondly is being a bad borrower. And lastly, signs of financial difficulty. So these are the main key areas.
And we're going to go into those in a little bit more detail now. So messy. What makes a credit report messy? Yeah. So I think in terms of kind of what makes a credit report messy, I think you may be keeping up with all of your loan repayments. You may have done everything right, but your credit report still comes across a bit messy. And what the issue there is that basically when you apply for credit, what a lender's trying to do is they're trying to, a bit like a jigsaw puzzle, they're trying to build up a complete picture of you and your financial history. And so one of the things that can make life difficult for them is that if you've moved homes often, if you've changed your name multiple times, we all have lives, things happen to all of us. But actually, I think, the issue there is that when those changes happen in your life, when you move to a new address, or if your name does change, it's really important to keep your financial institution, so to keep your bank, to keep your credit card company, to keep them updated on that, because that will mean that then it's easy for them to piece together and fill in the blanks. What makes your credit file messy is if they're looking up for you and there's big gaps, big years where actually there's no record of you, and that might be because you were registered at a different address, or you used a slightly different name, or you spelled your name differently. And so really, in an ideal world, what they're looking to do is they're looking to piece together all of your kind of financial past going back over the past few years. And so really important that you keep your name and address up to date, and ideally the same on all of your accounts, so that then the credit referencing agencies knows that it's you, and they know that it's all of you there. And I think, moving frequently and not keeping lenders updated on your address, really important not to do that. And that's particularly true when it comes to, registering for vote. None of my business whether you want to vote, and whether you plan to vote in the next election, or let alone who you're voting for. But registering to vote is really important, because that means that there's a record of you at that address that lenders can look up, and they know that it's you. So keeping your address history up to date, really important. I think the last bit there as well is that sometimes things go wrong with the credit rating system as well. There may be cases where somebody with the same name as you has applied for credit, or in worst case scenarios, and it does happen, it's happened to me, people apply for credit using your names and details. So if you're a victim of fraud, that's going on your credit report as well. And it may not be you, maybe somebody else, you may be a victim of fraud. But that's why it's so important to check your credit file, to make sure that everything that's going on your credit file is actually you, because it's on there whether it's you or not. So if it's not, if you spot a mistake, or if you spot that you've been a victim of fraud, really important that you contact the credit rating agency, so they can fix that, they can look into it, and they can get that sorted for you. So I think what we mean by a messy credit report is not one where you've necessarily missed payments or fallen behind or done anything like that. It's nothing to do with your financial behavior. It's just making sure that there's a clear kind of paper trail, a clear record of who you are and where you've lived and what you've done over the past few years, rather than having that in lots of different places so that it's impossible for a lender to link it all up and to get the full picture. Being a bad borrower, now, we don't want to be, it's important not to be judgy here, because things will happen, and I think, so that's why we put bad in kind of inverted commas, because this is from the perspective of the lender. And so, there are some behaviors which from a lender's perspective, it's going to make you less than an ideal person to lend to.
Yes, so firstly, that's missing payment.
An obvious one.
That's an obvious one in a lender's eye. It's a no-go zone, because this can go on your credit report for up to 7 years. This can stay on your credit report for up to 7 years, which, ideally you wouldn't want that following you around. Even if you do eventually catch up, it's still.
That's an interesting one, isn't it? Because often people say, okay, well, if I miss a payment 1 month, I'll catch up next month. Just the fact that it's been late and you've missed it, even if you sort it out later, it's still going to be hanging over you. And don't get me wrong, it happens. So I don't want anybody here to freak out or worry if they've missed a payment or two in the past. But it is important to be aware that does go on your credit file, and it is going to be on your credit file for up to 7 years. I think the longer in the past it is, the less impact it's going to have. Yes. But still be important to be aware of it.
Okay, and then the second one is exceeding your credit limits. So if you go over the agreed your credit card limits, then this could be a sign that you have problems staying within your limits. So this could be a red flag for lenders. And then the last one is CCJs and IVAs and bankruptcies. If you have any county court judgments filed against you, again, this isn't something you'd want to have on your credit reports, because essentially then lenders view you as high risk.
I think, and it's important to be clear, any of these three things can happen to any of us. And I think, one of the things we aim to do at London Mutual is that actually, some of these things, we're not just looking at your credit report alone. We're going to try and get the full story. So if you have had problems with county court judgments in the past, we're going to want to see evidence. We're going to want to see, what went wrong, what did you do to fix it? But we're going to try and get the full story here. But I think lenders in general, if you're looking to improve your credit score, these are the things that you're going to be looking to avoid if you possibly can. And I think we're going to talk about it in a little bit later, but I think, it's particularly important during the cost of living crisis. People's circumstances change, and they are changing at the moment. People's incomes are going down, people are losing jobs, people are having their hours cut. Yeah. Lots of stuff happening out there, which means that affect people's ability to keep up and make repayments. Yeah. I think we're going to come back to this, but I think the important thing to say is the more proactive you can be in letting lenders know that that's happening to you, ideally before you've even missed a payment. So, if you think that there's a risk you might miss a payment or you might have problems, much better to go to your lender before it happens and to warn them and to see if you can work together to come up with a solution. Much better to do that than to miss the payment and then be playing catch up. But we'll talk about that a little bit more in a second. Third of the kind of big red flags for lenders. What's this all about?
So signs of financial difficulty. So if you're regularly using more than 40% of your available credit, this suggests to lenders that you have trouble managing your finances.
Right. Okay.
Yeah. And then secondly, if you're applying for too many loans over a short period of time, red flag again for lenders, because it starts to raise questions. Have other people, refused you a loan, and why have you been turned down before, for your other loans? So it starts to raise questions certainly with them. And then lastly, low or no credit limits. So if you aren't borrowing for long periods of time, this suggests to lenders that other lenders this suggests to your potential lender that other lenders are not willing to borrow you.
Okay, so there's a sort of a slight catch-22 there, isn't there? Is that actually, not borrowing at all, or going for long periods without borrowing, having any, that can affect your credit history. Because at the end of the day, what a credit file is looking for is they're looking for evidence that you've got a track record. And so, avoid having a bad track record, but having no track record at all can negatively affect as well. So we're going to talk a little bit more about that first point in just a second. I think, it's important to understand what we mean, and what we're talking about here is something called credit utilization. So bear with me here. You've got a little bit of a graphic up on the screen here. And I'm going to show you what exactly we mean by credit utilization. So in this example, we've got a credit card or an overdraft that has an overall limit of £1,500. So, I as the customer, I've been approved for a £1,500 credit limit. I am free to borrow anywhere between £0 and £1,500 at any time I like. But but each time I use that credit limit, each time I make a repayment, that's getting reported to the credit referencing agency. So often, what people might be doing is maybe if I spend a little bit, so that little blue line there, if I spend a little bit of my credit card, so congratulations me, I've just been approved for a credit card of up to £1,500. I've gone out and made my first purchase of it. Maybe I've gone and treated myself and spent £100. So I spent £100 on my £1,500 limit. At this point, probably my financial institution is thinking something along the lines of, no, there's no impact. There's not, we're talking about a relatively small amount of money. And as I say, using the credit that is available to you is better than not using it at all. But overall, using a relatively small amount of my limits can have a relatively modest impact on my credit score. On the other hand, and if I go crazy, if I go and spend all of my available credit limits, so I max out my credit card, I go on a spending spree, maybe a big night out, and suddenly I've used up my credit limit and I'm at the maximum amount available on my credit card or my overdraft. I've spent £1,500 of my approved limit. At this point, perhaps my lender's starting to get a little bit worried. They're saying, well, okay, you're taking a little bit of debt here. When are you going to start paying that back? So maybe the lender starts to get a little bit nervous, and that's going to be reflected in my credit report, because actually what they're going to be seeing is that I'm using 100% of the credit available to me, and so they might there's a possibility that I might be either struggling to pay it back, or I'm relying on credit in order to in order to live my day-to-day life. So you want to try and avoid being in a situation where you're using 100% of the limit available to you, and then if it keeps on going and then I go over my limits, and we talked about going over our limits, and so that's when we get into the red bit of that graph. So at that point, we're out of the agreed credit limit. So my bank has agreed to give me a credit limit of up to 1,500. The minute I start going over that, that's when my lender's going to start to get particularly freaked out. And so they're going to be saying, again, I'm paraphrasing here, they're not literally going to be saying these things. I think it's important to be clear about that. But in terms of their approach, they're going to be saying, well, you're taking the mickey. You've gone over the limit. We've agreed the limit of £1,500. I've given you an inch. You've taken a mile. You're over your limit. No way are we doing this again. And so, that's an example of the kind of behavior going over your agreed limits. That's exactly the kind of behavior which, we talked about red flags. That's going to make it probably, it's going to negatively affect your credit score, and it's going to make it harder for you to access credit in future. So where do we ideally want to be? And I think, Lynn, as you were talking about this a second ago, in terms of kind of being between 30 and 40%. So really, the ideal place is if you've got a limit of 1,500, you want to be around 30-40% of it. So you probably want to sort of, you want to be using it a little bit, but using it not too much. And at that point, okay, they've got this, they're using a chunk of the credit available to them, but they're not going overboard. Then there's no risk of them maxing it out. Okay, and they're repaying it regularly. So actually, we know that this borrower is a fairly reliable, fairly reasonable, fairly calm. From the lender's perspective, there's less risk there. So that's what we mean by credit utilization. It's about having limits that are higher than the amount that you're borrowing, and making sure there's plenty of kind of headspace and plenty of room between the amount between your card or your overdraft balance and the amount available to you. So hopefully that helps to explain that particular one. So we're going to have another poll now, because I think we like the interactive element this week. What we want everyone's thoughts on how far back does your credit history go? So we're going to discuss. I'm going to launch that poll now, and we're going to get your feedback on what your thoughts are on how far back your credit history goes. So I'm launching that now. So let's get everyone's thoughts on. So what we're talking about here is if you do make a mistake and something does go wrong with your credit file, maybe you miss a payment, how long is that going to last on the record for? So let's get everyone's thoughts on that. Got 2 votes. Got a few more ideas. I can see just over half the people have voted, so we'll just give you a couple more seconds to get your votes in on this one, and we'll discuss what the people's answers. Coming up for 60 seconds. I'll end the poll at 60 seconds. Gosh, so the audience were pretty evenly split on this one, Liz.
Yeah, I can see.
So we've got a couple of people, I think, that say it lasted 12 months. A few people say 18 months, some say 5 years, and then say 7 to 10 years. So I don't think. So I think what's the correct answer on this one? So there's a bit of confusion around this one. I think so. It's a little bit of a trick question, this one, isn't it? Yeah. Because actually, stuff stays on your credit file forever, and so you for as long as the accounts are open, it's staying on your credit file forever. As a general rule, though, the people that answered 7 to 10 years are correct.
That is true.
Yeah, so 7 to 10 years is the correct one here, in terms of if you've got something like a missed payment, or you've had something like a county court judgment or something against you, that will last on your credit file for between 7 and 10 years. But that's 7 and 10 years after it's completed. So for something like an individual voluntary arrangement or bankruptcy, those are arrangements which can last several years. So for example, a bankruptcy can last anything over between 5 and 10 years. So potentially it's going to last on your credit file for up an additional 10 years after that. So all of those kind of solutions or options, or those legal remedies for dealing with debt, they're going to be hanging with you. They're going to be on your credit file for quite a long time. And I think that's same with other types of, with other kind of misdemeanors on your credit file, like a missed payment or something like that. That's going to be on your record for between 7 and 10 years. So as I say, the way the scoring system works is that the more time passes, the less of an impact that's going to have on things. But it is important to be aware that some of the stuff will be hanging around for a little bit of a long time. So if you can avoid it, it's best to.
Yeah.
So we've been quite sort of do this, don't that, but a little bit kind of finger wagging. So on a more positive note, Linz, let's talk about some of the steps that people can take in order to build better credit. Let me put that away. Yeah.
Okay. So firstly, keeping your name and your address on your accounts up to date. This is very important. People move all the time. We're not saying don't move, but if you do move, please make sure that your accounts are up to date with your updated address at all times. Also checking your credit report for any mistakes. As you mentioned earlier, there are cases of fraudulent activity. Sometimes things happen, but you need to take the responsibility.
You don't want to be penalized for stuff that you didn't do. Yeah, if someone's stolen your identity and run off with a load of money, why that should be affecting your credit file? So that's not fair.
It's not fair. So definitely give your credit report a check. Also watching out for fraudulent activity. We covered that earlier. Things do happen, so it's important to make sure that what is in your credit report you're familiar with. It's all you. No one else. So So then moving on, if you apply, you need to apply for what you can comfortably afford to pay.
Okay.
Don't what's the saying? Buy
more than you can choose. Yeah.
Yes. So apply for what you know that you can comfortably pay off. No issues such that you're not struggling monthly because you need to pay off your loan and now So yeah, and then taking advantage of offers of credit limits, if you trust yourself, of course.
From a strict, talking strictly, if someone offers, if your bank says we'd like to offer you a higher credit card limit or a higher overdraft limit, in theory, because of what we were talking about with credit utilization, in theory, that's going to improve your credit score. But there's a big but there. That's only if you trust yourself not to spend it and not to max it out. So if you're the kind of person that's tempted by having huge limits, which are then going to be tempted to go on a shopping spree, don't do it. We're not advising you to do that. We're not suggesting that that's a good idea. But if you do feel that you've got the self-control and you can trust yourself on that, that is something which, strictly speaking, will help to build better credit.
Yes, and then avoid repeating applications. So we spoke about this earlier. Of applying for too many loans, it's a sign of desperation.
That's really not attractive.
And it's not attractive. And it's questions of the lender. So avoid too many applications. And planned versus unplanned borrowing. Do you want to explain this one?
Yeah. So I think what you're looking for there is that I think there's lots of conversation around whether from parents and grandparents, lots of us were raised to think that avoid debt, don't ever borrow, avoid get out, don't borrow unless you have to. And I think there's something very solid in that, and we should all be avoiding unnecessary debt. But I think it's important to distinguish between planned versus unplanned borrowing. So if you find yourself in a situation where you're borrowing every month and when you weren't planning to need to borrow, but you get to the end of the month and you do need to borrow, that's the kind of behavior that, that's the kind of borrowing that you need to try and cut out of your life if you can. On the other hand, there's other types of borrowing, which is planned borrowing, where you've made a conscious, tactical, strategical decision that, actually I'm going to make a big purchase and I'm going to spread the cost over a period of time. So the other way of putting it is kind of considered borrowing versus unconsidered borrowing. And I think, it's, those two types of borrowing are quite different in terms of the impact it's going to have on your finances.
And then moving on, so get into a regular cycle of using and repaying your credit. So basically just make it a habit to use, but also pay off your credit. So make it a healthy, make it a win. It should be a healthy relationship, basically. You know.
what they're looking for is reliability and dependability. Yeah.
And then staying between 10 to 40% of your agreed limit. So Ben had a lovely illustration earlier. Try and stay within that limit, not go overboard. So try by all means. And then lastly, keeping unused accounts open.
Okay.
If you trust yourself.
Again, if you trust yourself.
If you trust yourself.
So even if you paid off your credit card, you know, the temptation to say, well, I paid off my credit card, don't need that anymore, I'm going to close the account. Again, if you trust yourself not to spend on it again, it's better for your credit score to keep those accounts open, because what lenders are looking for is they're looking at all of the credit available to you across all of your different credit cards, overdrafts, wherever else, all of the available credit and how much of your available credit you're using. So if you've got more credit available to you, even if you're not using it, it's worth having it there. So keeping those unused accounts open. Again, if you trust yourself not to spend on them, if you think you're going to be tempted to spend on them, then cut it up, stick it in the shredder and you know, close the account by all means. But if you trust yourself not to spend on it, having more credit available to you than you need is going to have a positive impact on your credit score.
And then lastly, sticking to your agreed terms. And this is, I feel like these points are all to do with character as well. So sticking to the agreed terms, if they've given you 1,500, stick to that. Don't try and push the boundaries. I mean, yeah.
So it's about kind of being that, you know, that steady, reliable, being that steady, reliable person. So making payments when you said you were going to pay them, paying the amount each month you said you were going to repay, paying off the loan when you said. Basically, it boils down to, as much as possible, doing what you said you were going to do.
Right, but yeah. And then also being proactive in communicating with your lender. As you mentioned earlier, things happen. Not to say that things don't happen. If you see a potential risk, you know, you need to be able to communicate with your lender and let them know like what's happening. Don't wait until the very last minute to, you know, when you realize you can't make, you miss the payments and you haven't communicated this with your lender. I think it's very important to communicate this before it even gets to that point. Yeah,
and I think, you know, this is something which comes up quite often in, you know, when we're talking about this, is that, you know, if your circumstances have changed, so you know, you've lost or changed jobs, or your salary's gone up or down, or you know, your benefits, you know, your benefit situation has changed. If your financial situation has changed in a measurable way, it's better to let your bank and your lender know about that as soon as you're aware. So before it starts to have an impact on your finances, before it hits your finances, before you're missing payments or falling behind or getting yourself into problems, be proactive and communicate that to your bank. Because 9 out of 10 times they'll be able to work with you to find a solution, and they will appreciate you. It will show that you are responsible and that you are proactive in managing your finances. And 9 out of 10 times that kind of proactive behaviour is going to be rewarded, rather than you know, doing what we would all be tempted to do, which is to sort of run away and hide. You know, that's all of our instinct. But you know, it's you know, chances are that if that happens, the situation is going to get worse and worse. And the options available to you are going to be reduced. So I think on that note, it's time for a little bit more audience participation. Yes. So before we go through to questions, we in the space of credits, credit reports, credit files, there's lots of myths here, aren't there? There's lots of kind of misconceptions, and people think that they understand how it works, but those misconceptions aren't always right. So we're going to have we're going to put some kind of true or false questions up on the screen, and we're going to have a chance to briefly discuss those. So first question, is there a secret blacklist? And what we mean by a blacklist is that do the lenders keep a secret list of people who under no circumstances they will lend to? Is there a secret list of people that are blacklisted and unable to access credit? So let's have your views on that. So again, we'll give around, I think, you know, for this one, because it's a true or false question, we'll give around 30 seconds for everyone to give their feedback on that.
Very interesting. What everyone thinks.
So share your views with us. Again, looking neck and neck, this is very interesting.
Yes, I love it.
Just seeing the results come in, give people just a few more seconds, just anybody that hasn't had the chance to share their thoughts, and we'll end that poll in a second. Okay, so we'll share those results. Again, 50-50, controversial. So in terms of the answer, it's false.
False.
Okay, explain why you think it's false, Liz.
Well, there's no such thing as, well, I thought there was, but there's no such thing as a blacklist. Banks just want to know that the lending decision is just based again on your financial behavior. They want to see that you're paying your bills on time, and it's on the basis of your credit score, along with other information on your credit file. So there is no black book that says we're never gonna, lend money to so and so. There's none such.
But there's a slight nuance again, as with all these things. There's a slight nuance to that, in that because lenders, like we've talked about, are looking for similar sorts of behaviour. They're all looking at the same information through the credit referencing agencies. It's possible for your credit to get so poor that it's unlikely that anyone will be able to lend to you.
Yeah.
And I think there are some examples of that. For example, if you get declared bankrupt or you enter into certain types of debt, it's actually illegal for lenders to lend to you. And so there are some circumstances where actually by law the lenders can't lend to you. And then there's situations where all of the lenders will be able to see that your credit file is so poor that it's unlikely that anybody's going to be willing to take a risk on you. So it's wrong to say that there's a big black book or list anywhere that says absolutely these people are a no-no, these people won't ever lend to. And as I say, even things like bankruptcy stay on your credit file for 10 years. So whatever your situation, there's always light at the end of the tunnel, and there's always going to be an opportunity there to improve things and to make things right. Next misconception. My partner's credit score will not affect mine. Let's launch that one and see what people think about that one. So again, another quick fire question. Do we think that your partner's credit score will affect yours or not? Well, there's a little bit more of a front runner on this one.
Yeah.
Giving it 10 more seconds. And we'll end that poll. Share the results. So we've got a clear answer on this one. So people say it's false.
Yeah.
Were they right? Did they get it right?
Sadly, no. It's true. Your partner's credit score will not affect yours only unless you're financially associated with them. So lenders are not concerned if you're in a relationship, if you live together, they're not concerned about that. So your partner's credit score, if you're not financially linked, is their credit score. However, if you do have joint accounts, then yes, then that's when that will affect you.
Gotcha. So credit scores, they are credit files, they're based on us as independent as individuals. So my housemate, if they're a little bit messy with their finances, just because we live at the same address, that's not going to negatively affect me. Same, the bank doesn't care what my relationship status is. They don't care about any of that stuff. They don't know. They're not interested. That's private. But where it does have an impact on your credit file is if you decide to make the big step of setting up a joint account, at which point the details on that account are going to be shared. They're going to appear on both of your individual credit files. So joint accounts don't care about your relationship status, but that's why it matters to think carefully about things before agreeing to set up a joint account with someone. Next question. This is one which comes up quite often, isn't it? It's the less you borrow, the better your credit. So thinking about this one, I think the stuff we talked about a short while ago around credit utilization is quite important here. But again, let's see whether what people's views are on this one. So the question is, true or false? The less you borrow, the better your credit. Again, the room's pretty evenly split on this one. we chose well with the questions in terms of ones that perhaps don't have necessarily a clear answer. So the room's pretty split on this one. So half the room say it's true, the other half say it's false. So let's reveal the answer. So Linz, it's false, isn't it? Why is it false?
We spoke about this earlier. If you're not borrowing, if you're not using your credit, it's like it's supposed to raise questions with lenders like why aren't you borrowing? Other lenders, refusing to borrow, and we covered it earlier, and we basically said you need to basically borrow because the whole point of a credit score is that it allows lenders to judge your previous borrowing and your financial behavior. Basically, they need to see, you need to basically build yourself a track record. If you have nothing, then
It's a little bit like a muscle, isn't it?
Exactly. It's the same with, I feel like with the other one, this statement is also kind of, it's a catch 22.
It's a little bit like a muscle, isn't it? You've got to exercise it in order to have it. Otherwise it will waste away. I think the thing to be clear about here is that we're not saying go out and borrow everybody. What we're talking about in terms of considered borrowing versus unconsidered borrowing, planned borrowing versus unplanned borrowing. That's all important. And I think that's the key question to have there. But I think what we are saying is that if you don't ever borrow, just be aware that if you don't ever borrow, if you've never borrowed and you've never had that reported in terms of credits, your credit file is going to be relatively weak. So if you are looking to borrow for the first time, it's important to remember that what you're doing there is you're building your credit file from scratch. And so no borrowing means that you'll have a very limited credit file. And so there are some approaches you can take in terms of if you've never borrowed before and you're looking to borrow for the first time, start small, start gradually, and just build up. And over time, you'll establish a good credit. You'll build your reputation. You'll build your rep, and you'll see that a credit score is something which you need to actively build because your credit score starts at zero. And so if you've never borrowed before, don't go and apply for don't go out and apply for thousands and thousands of pounds if you've got no track record of ever having a loan before, because as we've talked about from the lender's perspective, they're going to be saying, well, who is this person and can we trust them? So it's a bit like a reputation. You need to build a reputation, and your credit files in a similar sort of way. So I think one more question. Yeah. True or false? And for those of you that watched the previous month's session on this topic, we've got one more question, which is true or false? You only have one credit score. And if you've watched the previous session, you'll know the answer to this one fairly easily. And I can see we've got a few regulars who are watching today, because there's a clearer winner on this one. All right, we'll end that one just to make sure we've got time for questions afterwards. So clear winner here. The majority of the room say that it's false. People have more than one credit score. So Linz, if you explain that one to us.
False. So yes, it's false. So the reason why it's false is because banks and other creditors use several scoring models, basically to evaluate your credit score. So you don't just have one credit score. Different agencies.
Yeah. So in the UK, there are the three credit agencies. Yeah.
Yes.
So TransUnion,
I couldn't pronounce that one.
and Experian are the three in the UK. So each of those will maintain a separate credit file on you, but they'll be sharing information between them. So three places to check your credit score. And if you're interested more in how that works and how that's set up, check out the previous session, managing session that we did several months ago around how the credit scoring system works. So we have one more question for you today, but I think given that where we're out in time, I think we're going to skip right through to questions now. So if you've got any questions, please pop them into the message box. I'm just going to launch the Q&A now, and you'll see that we should now be open for questions. So if you've got questions, pop them in, and we'll do our best to answer them as normal. Gosh, I think we answered a lot of people's questions today. That's anything I can see here in the chat. No, I think we've a stunned silence. So we've got a question here from an individual that says, I've only missed one payment on a card I've had for 2 years, and immediately told me they were increasing my interest. So without knowing the details of your card provider or their reasons or their rationale behind it, it's kind of hard to talk through the specifics of that one. I would say that different cards, different card providers, different types of cards will be aimed at different types of people. So people with good credit, poor credit, a whole range, different income levels, and so they'll each have their own terms and conditions. And I think, at the end of the day, it's a decision of the individual lender in terms of where their risk levels are. And so, there will be some lenders where they're slightly more accommodating to those sorts of things, whereas there'll be others where they're really strict, and it's important that you read the terms and conditions, really strict, and where one missed payment can mean that you miss out on special limited time offers, special deals, special rates. There may be situations where they put up the interest, as it sounds like happens here, because they've decided that you're higher risk. And so I think it can often be quite harsh, to be honest, in some cases, because we all make mistakes. But I think that's why it's important to both kind of regularly monitor your score. I think when these things do happen, keep an eye on where your credit score is, because actually then you've got a right to access your credit file, and so you'll be able to see the same information that lenders have got with you. And at the end of the day, if the lender that you're with is not giving you the rate or the limit or the terms that you think that you're able to access, shop around and see what else is out there and see what else is available to you, because it may be that there are others that have got a different approach, a different view of how much risk you present, and so there may be other options available for you. So as I say, I think it's important to say, and I think we say this every week, can't give individual financial advice here on what to do, because we don't know everybody's individual circumstances. But what we're trying to do here is we're trying to share some general insights into how the system works and kind of what the different kind of rules of thumb are here. We've got another question here. I've never had a loan from the credit union. Does it mean I have a low credit score? Not necessarily there at all. It doesn't have to be from the credit union. All types of lending. So not just London Mutual, but all lenders will be reporting. So if you've borrowed with others in the past and you've made repayments, that will be part of your credit score. If you've got a mobile phone contract or have had a mobile phone contract in the past, those monthly payments of your mobile phone bill, they'll be going on your credit score. If you've got bills, so your broadband bill, your energy bill, those get reported as well. All of that helps to contribute towards building good credit. So if you've never borrowed, never taken credit from anybody or done any of those things that I just mentioned, chances are that your credit score won't be bad by any stretch, but it won't be as strong as it could be, because you've got no track record of borrowing. But as I say, most of us from just in the course of day-to-day life will have built up some kind of credit, and so as long as you've kept up with things, chances are it's going to be reasonably good. Another question: can I get a mortgage with a county court judgment? That's a very good question. I think I'll have to check this one, and I'll follow up. If you want to drop us an email, we can look into this, or we can, it's worth Googling around this one. My understanding is that probably the majority of mortgage lenders are going to be unlikely to be able to consider your application, because with mortgages, we're talking about a relatively large amount of money, a few £100,000 at a time. So what they're looking for is as much as possible for it to be low risk. And so there may be specialist mortgage providers out there, but I would say as a general rule, probably having a CCJ on there is going to present a problem with the mainstream ones. But don't take my word for it. There's certainly no harm in asking. And so speak to potential mortgage providers, read their acceptance criteria, their terms and conditions, do their research before applying. In terms of other questions, Is interest paid on my credit union savings? So that's slightly off the topic today, but very happy to answer that one. As a credit union, the way we work is that, as you know, we don't pay interest on regular savings accounts. And instead, what we do is that because we are a financial cooperative, we're owned by our members, so we don't, there's no owner of the credit union that's there on a yacht or making lots of money. Any money that the credit union makes each year is either used to improve our services, or it's given back to our members who have savings with us as a dividend. So in years when the credit union does well and it makes a healthy profit, and where the credit union is in a good financial state, yes, you'll receive a percentage back. You'll receive a dividend on your savings. Unfortunately, because of COVID and because of the cost of living crisis and all the things, it's been a pretty unprecedented few years. Because of that, for the past few years, the credit union's board of directors, who are elected by the members, they've decided against. They've decided that paying a dividend is not the financially responsible thing to do. Hopefully that will change in the future. We all hope that it will change in the future as the financial situation and the economy improves. But that's where we're up to at the moment in terms of paying interest on members' accounts. One final question here: how can I improve my credit score? Hopefully, some of the tips that we've kind of covered today have been useful in answering your question there. I think, particularly, we're going to put this recording up on YouTube. So if there's anything that you missed or that didn't quite make sense, then feel free to play it back and to re-watch it. I'd also recommend watching, if this is a topic you're interested in, really recommend going back and watching the previous one that we did on credit scoring. And I think, one of the things we'll also do when we send the roundup email after this session is we'll include some extra links as well, so where you can get some slightly more information on this topic. But I think, as with all of these conversations around money, if you are ever unsure about what to do for yourself, what's right for you in your circumstances, if you need specific advice about your own situation, don't rely on these sessions. Don't rely on stuff that you read on the internet. Get some solid advice. So, there are lots of organizations out there, people like Citizens Advice, there's the Government Money and Pension Service, a whole range of independent money advice organizations out there, which will be able to give you the impartial, personalized advice that you may need in those situations. So, we're not here to do that. We're not qualified to do that. If you need money advice, make sure you get it from an independent and trustworthy source. So I think we're just about at the end of today's session. I think hopefully everyone's enjoyed that. We really appreciate you joining us today. As ever, if there are questions or topics which we haven't managed to cover today, our contact details are up on the screen. So you can email us at any time at help@creditunion.co.uk. We've got our phone number up on there. You're always welcome to drop by our branches and speak to one of our members of staff. And then if you are on online banking, the most secure way of sending a message to us is via your online banking app via the secure messaging feature within that. So feel free to contact us anytime with your ideas, feedback, question about today's session. As I say, we won't always be able to help with everything, but we'd love to have your feedback on it. And at the end of this session, you'll receive an email as well, asking for your feedback on how the session went. We've tried a few things this week in terms of the polls, making it a little bit more interactive. We'd really love your feedback on that so we can decide how to go forward with kind of future sessions like this. Any ideas you've got on topics that you'd like to see us covered, really interested in that too. But on that note, we will leave you to get on with the rest of your day, and thank you again for joining us. See you soon.